Thank you for watching our videos with WatchGuard Tax Services. It's tax season. It's not the most wonderful time of the year, but it is an important part of the year. File or not to file, that is the question. So what happens when you don't file? The most common thing that happens when you choose not to file is the IRS may file for you. This is known as Substitute for Return, or SFR. While a Substitute for Return may sound ideal because you don't have to worry about filing, it really isn't the best solution. You may have some questions now like, how does the IRS know to file a Substitute for Return? Why isn't an SFR the best solution? Also, is this the worst that can happen? The IRS comes to the conclusion to file an SFR based on reported income. This may be reported on a W-2 or a 1099. The reason it's not the best option to wait for the IRS to file a return for you is because the IRS doesn't take into consideration your filing status, any deductions, or other benefits you may have when you file for yourself. Additionally, when the IRS files an SFR, it could show you owe a tax liability. And if you had filed for yourself, you could have a lower balance or no balance at all. A substitute for return is not the worst case scenario, but definitely not ideal. The IRS can take much stronger action. It's important to note, an SFR is done when a tax filing is delinquent, not typically for same-year filings. If you don't file timely, you could risk having an SFR done in the future and also penalties and interest for not filing or paying on time. The moral of the story is, it is important to file. Go ahead and file or file an extension so you don't have a substitute for return. Thank you again for watching our informational tax videos. We hope you found this video helpful and informative. We invite you to like and follow for additional videos about tax resolution and more. WatchGuard Tax Services. Welcome to the solution.